Hello guys, fairbinaryoptions.com here, and we are looking at the euro US dollar. We haven't looked at the pair in quite some time. It is the 4-hour chart here, but we would like to buy call options based on this chart. The reason for that is the fact that, as you can see, market is now 135.51, so we would like to buy call options. We would like to go end of week expiration date, and the reason for that is that the structure from these highs to these lows, or on the move to the downside, should be labeled as an ABC or just a leg of a triangle. So we are looking basically for this moment of time, so this to be labeled like an ABC, to be formed. So A, let's say this is wave A. Let me change the color for it so that we can actually see it like this. So wave A to come around here, so this to be wave A, and then to have the B wave here, and then of course to look for the C wave to the downside, and this should be called a zigzag. Why a zigzag? Because a zigzag goes with a 535 structure, and the B wave here retraces less than 61.8 when compared with the previous wave A. So we have A, B, and the C to the downside, and actually looking for market from this moment on to make a corrective wave. Now, if you take a Fibonacci retracement, you look at the length of this corrective wave. So from these highs to these lows like this, you are seeing that 61.8, the 61.8 here is being pierced, but with these highs is being pierced. Now the move to the upside is not done here at these highs, because this again seems to be another contracting triangle, and I would say that the X wave, because I'm looking for an X wave, is here. Now why it's important that? Why is this detail important? Well, it is important because market basically goes for a corrective wave in the form of an X wave below the 61.8 in order to form a double combination, or if the X wave goes more than 61.8, it's going to be a running variation of a complex corrective wave. It's not the case here, and therefore the next move to the downside should be labeled wave A, and the B wave, and the C wave. So A, B, C, and I would say the whole structure is completed. Even this C wave now to the downside, see it has 1, 2, 3, 4, 5 with the spike here that we have that we had in the last at the beginning of this Asian session today, and the whole structure from here. So from here to here, it is being actually called a double combination. Basically, we have two different corrective waves, a zigzag corrected by an X wave, and then a flat. So two different corrective waves, and these are calling, if I may say so, for a bounce higher. Now, how high would be that bounce, and what would this correction mean? Well, normally this correction, providing that 134.89, so the lows here, providing that these lows here are holding, then this correction here seems to be only the leg of a contracting triangle, and what we are actually looking for, we are looking for a retracement around this area for the euro US dollar to come. Therefore, because we are looking for the upside to come, and this upside to be in a corrective wave as being part of a leg of a contracting triangle, therefore we would like to buy call options, but these call options to be bought, you need to have an expiration date. So for price at the expiration date to be bigger than your striking price being the level that you buy the option for. So as you can see here is 135.50 now. So what we would like to do is to buy call options with end of week expiration date. Basically the upcoming Friday. Now, any broker that respects itself needs to offer or will offer you this kind of an expiration date. We are trading here with lionknife.com, and such an expiration date already is available, so I don't think that you will have a problem in finding such an option for the euro and the US dollar. Now, thank you very much for being here. This is fairbinaryoptions.com, and again, all these recommendations and analyses are possible due to the general sponsor that we have, Lion Knife.